Welcome, this is India Market Open. We're taking stock of the futures and options space at the moment. Yesterday was yet another day where we saw the Nifty make a new lifetime high, largely on the back of the IT space, which actually continued to advance. And on the back of that, we actually did see the Nifty at least, move up and make new life highs. But the question really is that what does that mean? We have seen more longs being built into the system within, given the open interest did increase by another 5%. As far as the July futures are concerned. The Bank Nifty, on the other hand, which did advance by around 0.5%, actually didn't see any addition and saw a little bit of unwinding coming through as well. Well, moving on, when you consider the options market, as we move into another week, naturally we are going to see a little bit more of support around the 24,500 mark, because that's where we're seeing a little bit more accumulation around puts. On the higher end, of course, at the moment, considering we may test the 25,000 mark, if not today, then potentially on Monday or Tuesday, that remains an important zone, because as you can see, there's a substantial amount of calls being written out there already. So if we actually see the Nifty take this level out, there could be a further up move from there on. That said, when it comes to stocks, it was a mixed year of trade, but more losers than gainers. And while we did have longs in India Cement, Muthoot Finance, India Mart, Intermesh, even in terms of stocks, we saw unwinding. Well, there was long unwinding for Vodafone Idea, L&T Finance, as well as something like a Tata Chemicals. But given the current circumstances, what are the stocks that can perhaps be put the spotlight on? And what are the option structures that we can work around with? But for that, we have Avni Bhatt of JM Financial, who's joining us on the show. Avni, good morning. Thank you so much for joining in. I reckon that the first stock on your radar is Bharti Airtel. Can you tell us about your assessment of the stock and what sort of an option structure you're deploying here?
Good morning, Agam, and a very good morning to all the viewers as well. So Bharti Airtel has closed above the weekly resistance of 1465 and on reasonably good volumes, and after a 6 weeks of consolidation phase. So there's a positive RSI crossover also seen, along with a lot of short covering in futures, almost to the tune of 2% in a single day. So that's a good, very good structure technically as well as on derivative parameters. So we believe that Bharti Airtel from here on should see a very good move on the upside and a very quick move. And that's why we recommend buying a call option of July 1500 call at around 11 rupees and keep a target of 28 for the call option and stop loss of 2. So the risk reward here is very good. And my second stock would be from the oil and gas sector, which is BPCL. So BPCL again has closed just above the weekly resistance of 317 and on very, very good volumes and after a 15 days of consolidation. So if there is any stock which moves up and crosses the resistance level after a phase of consolidation, the up move is pretty quick and huge. And we've seen a massive 4% of short covering also in the stock. The shorter moving averages of 10-day, 20-day and 50-day moving averages are trading right below the price action. So they'll keep supporting the up move. And that's why we recommend BPCL also a vanilla call option, 325 call option for the July series at around 5 rupees. And the target can be, it can be a potential doubler. So the target would be 10 rupees and the stop loss can be kept at 1.5.
Okay, so two calls coming in here, based on Bharti Airtel as well as the other one is BPCL. And do remember that BPCL will also react to earnings coming in over the weekend on Monday. So naturally, we will have that impact as well. But Avneet, if you just zoom out and very quickly, if you can give us your overall sense of the benchmark, that is a Nifty 50. How are you reading cues here, and how are you approaching this?
So if you actually see the price action between Nifty and Bank Nifty, there's a huge divergence. Nifty is making newer highs every day, while Bank Nifty is still languishing within the 52,000 to 53,000 price band. And so now the game from here on is whether which index will catch up with the other one. And hopefully the entire data set for Nifty is pretty positive. Although some of the technical and derivative parameters are highly overbought, Around OIPCR is around 1.33, which is close to the resistance, while the RSI is also trading above 70% for a pretty long time now. Although there is no divergence in the RSI along with the price action, but it's pretty overbought. So there can be some cool off from the higher levels. Yesterday's up move up to around 24,800 has been a very good move. No signs of shorting yet, but there can be some bit of cool off. So as far as the trading strategy is concerned, I have three scenarios here. If at all we see a gap up opening close to around 24,900, we will not chase the gap up. I think you should get into the profit booking mode and stay light over the weekend. If at all there is any kind of a dip close to around 24,650 plus or minus 20 points, then I think it becomes a very good buying opportunity with a stop loss of 24,500 on the downside, and we can obviously target around 25,000 on the upside. And if at all it's a flat opening, a neutral opening, then I think you should wait for the first 1 hour of the trade to see where how the markets are settling down and which direction is it in a mood to go.
Okay, well, in interesting way of looking at things, certainly, and I reckon that at this point in time, Avni is suggesting caution considering the heady levels at which the Nifty are currently trading at, and of course the key mark to keep an eye on in today's day of trade specifically is of course 24,900, and you can perhaps base your decisions based on that particular level on achieving it or no. But on that note, Avni, taking a moment to thank you for joining us and taking us through your views on the markets, and of course giving us a couple of trading ideas to work with. With that, it's back to you all.